Hello everyone, welcome back to another episode on What's on My Radar. And in today's episode, we are going to have a detailed look on Bank Nifty, Nifty, and gold chart. So stay tuned. Alright, last week we have mentioned that Bank Nifty can bounce back from this area specifically. Now, the reason was that we had one Fibonacci confluence area over there. So this, you can see that at 886 the market just bounced off from there. Now the reason is that we had one pattern which is getting completed at that same Fibonacci level. So this was the pattern, and according to the pattern, the market is supposed to reach till the 382 level over here. So let me remove the previous Fibonacci level. So it was supposed to reach at 33,262. It doesn't look like it will reach on Monday. Slowly it might reach it, but let's go to lower time frame and see how all we can take this into change this into a opportunity. So let me go to 15 minutes. Alright, in the 15 minutes you can see that the market is in a consolidation right now. We have a market playing in a range in this area, and we never got a breakout on the downside. We got a spike which is just like the same one over here which you're seeing. So there is no clear indication saying that the market is planning to go down, but once we have a breakout on the downside, now there are chances that market can go and test the previous structure over here. Okay, so that will be something which I'll be looking on if the market does break out. The first take profit you can always look at over here. So this is the structure which I'm looking at. That will be the support zone. So if the market bounces off from here, that will be great. We need to wait for some kind of pattern like a double bottom or a falling wedge, which is indicating a loss of momentum after a fall. So now that's the thing if it breaks out on the downside. If it breaks out on the upside, we can let's say we got a breakout on the upside, we can wait for a pullback to enter on this one, and we can go ahead and target the Fibonacci level which we were talking about, that is over here. Okay, now that is going to be a good risk to reward, and that is at the structure over here. You can look left and see quite a lot of time the market did test those levels. So we need a breakout on this one. So until then, I will not be looking at, if it is playing in a range, I will not be interested on the Bank Nifty until it breaks out basically. So wait for the breakout, and then we can go ahead and check which direction the market goes. If it breaks out on the downside, we have the first support over here and the second support over here. Okay, if it breaks out on the upside, there are good chances that the market can go ahead and test this level, that is the 382 of the Fibonacci. If it breaks out above that, then the next target you can go ahead and take it over at 618, which is quite huge. Not sure whether it will reach in this week, but that is something which I have in my radar though. So that's about Bank Nifty. Now let's look at Nifty as well. So Nifty, we don't have any pattern on the higher time frame. If you look at Nifty, we have market playing in a falling wedge. So this is the falling wedge which I was talking about. It has been playing in that same range, so we can even keep it over here. Okay, so there are chances that the Nifty can go ahead and test this level over here, that is the 14,800 level, and that makes most sense to me because I'm a pattern trader, and there is an advanced pattern formation over here which is getting completed in and around that area. So The pattern is let me see. So this is a higher pattern which is in the 1 hour time frame. So if you go to the lower time frame, we can even we can take this as the impulse move, and you can see that it is getting completed right at 14,800, in and around that area. So this is something which I'll be looking to enter. Now before reaching over there, now if the market reaches over here, I will be looking out for a shorting opportunity. But before that, we might have another entry over here. But right now the market is retracing. We have a structure over here. So we can wait for the market to go and test this level at least. And let's see whether we can go to 5 minutes and see whether any let's see whether, no, we do not have any patterns. But this is something which we need to look at. We can wait for the market to go and test this zone, that is the 14,500 zone. So once we have a reversal over there, we can go ahead and target till this decompletion point. And once it reaches over there, there are chances that it can do a major pullback from there. If not, we can wait for the market to bounce up from there. So we need to wait and check whether any kind of reversal pattern is happening over there, not just the candlestick pattern, a reversal chart pattern. And another thing is Nifty is making, like I mentioned, it is doing a falling wedge or a channel, you can say, which usually indicates that it can break out on the upside. So basically how the market moves is like you have an impulse move, you have a pullback. Now this pullback is not always like a straight pullback. It can go like a triangle formation or a flag formation or a wedge formation, whatever you want to call it. So this can be considered as a pullback. So this is the channel over here, and there are chances that it can go up on the upside, and that is the same thing which is doing it over here. So wait for it. Do not expect that the market can just shoot up from here. We need a clear breakout. Now a clear breakout for me would be breaking out of this swing high. Now that is a major swing high. Now if we have a breakout over here, then we can expect the market to go even higher, but we need to wait and watch for this one as well. So that's about Nifty. Now I am on the gold chart right now, and gold has done exactly what I wanted. It did a double bottom and then bounced off from there. This was in the last week video I mentioned that this was the double bottom and we need a break and close about this one. I was expecting a little bit of retracement, which it didn't do. So yes, I did have a short as well, but stop loss got hit. Now that is something which we need to get used to. But there are a couple more opportunities. Now the main target is around I think let me see, let's draw a Fibonacci from here to here. So the main target for this pattern is around 1828.93. So that is the first target, and the second target is around 1923, which I'm not sure whether it will reach but we need to consider the other factors as well, because quite a lot of patterns are there in this gold chart itself. So the first pattern is that we have a move over here. There are chances that it can go over to 1800 and then fall down. Now why do I say that? Is because of the pattern which is occurring over here, an advanced formation. So X to A to B to C, and CD completion somewhere over here. So yeah, that is in and around that 1800 zone. So you can expect the market to do a pullback from here before testing the 382. I'm not saying that it will definitely do. There are chances of it, okay, and there are chances that it can just blow past. So if you have a long opportunity on this one, hold on to it until you see any kind of a loss of momentum pattern over here. So for example, you are seeing a huge move like this, and then a flag pattern or a rising wedge pattern, which is indicating that the market can go down. Now that could be an indication that the market could reverse from there. If you do not have an opportunity, do consider shorting from here. Obviously, do check out your risk to reward on this. Now for this one, we can keep our stop loss above this X leg over here. So we need to keep our stop loss above this one, and the target would be around, if the market reverses from here, we need to target the first as the 382 and the second as the 618. My expectation is the market could do a retracement up to 382. Why? Look left. We have quite a lot of structures over here, right? So once we have a bounce off over here, maybe it can go ahead and test the bigger target that is around the 382, which is over here, around 1828.93 level. So that's what I'm looking at on the higher time frame. Now in the lower time frame, obviously you will get a lot of opportunity. So if you're going into the 15 minutes time frame, you can see that there are multiple patterns forming over here if you're more into harmonic patterns. So if you remove all the drawings, we have a pattern. Now how to take advantage of this? Now I've already mentioned that the market has the potential to go up to 1800 level. Now how do you take advantage of this? One way of doing that is, this is a triangle pattern. You can wait for the breakout of this high. That is the minimum which I wanted, because that is a major swing which we have. So once we have a breakout over here, then I would go ahead and target the 1800 level, where the pattern, the 4-hour pattern which is getting completed. Do watch out, do rewind and look out where the pattern is getting completed, which I have drawn it on the 4-hour time frame. So that is where the target would be. Another way is, there are chances that the market can do a complex pullback. Now complex pullback will be like, you have a pullback inside a pullback. So you feel that the market is going in an uptrend, but there are chances that the market can do another pullback and then shoot up from here. So how do you take advantage of that is, we can see that the major structures are over here. So this is the previous swing which it has created. We can look for a 1-to-1 measured move. So this is the impulse move which I'm looking at, if at all, if it's doing a complex pullback. So we can clone this and then paste it right over there. Not exactly the same area, but near to it. And hey, it's never perfect, right? So this could be the zone. So market could do a pullback till here, and maybe if we get a double bottom over here, then there is a good chances that your risk to reward will be high, because if you're getting a reversal from here, your stop loss will go below this and your main target is over there. So you can book half the positions and then lock in your profits, and then let the rest of the positions to go ahead with the profits, whatever you're getting. Another option is, if this doesn't work, if the market is going even more further down, then we have this pattern over here. So that is X to A to B, B to C, and CD completion over here. Again, look left, we have structures, quite a lot of structures over there. So maybe there are chances that the market could bounce off from here. That is another way. And yeah, that's basically it. I do not see any other formation right now. The only other formation what I see is a basic trend line over here, a simple trend line, which definitely works. But again, like I mentioned, since I'm a chart pattern, I do see this as a symmetrical triangle. But again, for the breakout, I would definitely wait for the market to break out of this swing. So once we have a breakout of this, then we can go ahead and target the 1800 zone. So that's the detailed analysis which I have for gold. So yeah, that's it. So let me know if you like this video. Smash that like button if you like it, and do subscribe. And yeah, have a good week ahead.